Good morning, everyone, and welcome to Market Insights. This is our monthly market stats update with ARMLS Specialist Scott Kiburz, and we are kicking off the new year with some positive outlooks on our horizon in our Phoenix real estate market. So, Scott, I'm going to hand the reins over to you, and we are going to get going.
Welcome, everybody. Thanks for being a part of this today. Let's jump ahead to the next slide as we lean into January with some fast fact data. Number one, active homes in Maricopa County, 12,493. This is on January 1. That's total number of properties in the MLS. We had 44,153 closed. We had 418 coming soon. Our absorption rate increased to 30.84%. Average sale price dipped a little bit further to 518,918 for our average sale price. And our interest rates still are running low sixes. Sometimes we're tipping into the 7.2. Ladies and gentlemen, one of the forecasts coming out of NAR later this year is that they're forecasting interest rates in the first quarter to hit the high fives. And by the end of Q4 2023, they're anticipating interest rates still in the 5 range, but in the lower 5% range. That's what NAR is indicating here. Let's go to the next slide, Sarah. Okay, so our agenda today, really, we're going to do a NAR update, which is just, they put out a really nice document December 13th. I'm going to share some of the key data with you there. Look at the Maricopa County, where we're at. Please know there is if you're in the spirit of a great track meet, there's a gun that's just fired to start the race. It's just going off right now. It'll be in full stride next Tuesday of next week. And then, of course, we'll look at the individual cities. But right now, today, we're looking at some trends of our local market, our national market, and then some seasonal trends with holidays and things like that. Sarah, if you would, please. So this is from NAR, and this is what they're looking at from January to October of existing monthly home sales. And you're just seeing the decrease in homes, and that's really a great reflection of interest rates, some fear in the marketplace, and a trend down. The biggest thing you'll look at there is if you slide over to April, May of 2020, you're seeing we're dipping into that beginning of the pandemic COVID insert from 2020, and we are low compared to previous years. Sarah? When we look at this piece here, what NAR is trying to demonstrate for us is when we had the last housing cycle versus the current housing cycle, well, they're trying to illustrate insights about jobs and payroll and cuts. And really, this is a reflection of interest rate increase just because our economy was so vibrant and full of inflation. And they had to do something, and the lever from NAR and the government is increased interest rates. And it has had effect in the housing market. And that is causing this cycle versus the previous cycle. And these are some reasons why. Sarah? Next, we looked at distressed home sales. And please know, ladies and gentlemen, we really are in a great place nationally with very little distressed homes, foreclosures for whatever reason happening. Next slide. What we're looking at here is the market condition in terms of homes sold, etc. And this is going to be a national look versus 2021. And the biggest thing here that jumps off the page, ladies and gentlemen, is we're down 34.9% in the total number of homes sold from the year 2021. Many people will tell us that 2021 was an anomaly, that it was just too good to be true. There's some truth to that. And yet, being down 34% changes a big way in terms of forecasting for loans, forecasting for title to work with the number of transactions closed and the number of realtors closing transactions. Please know that for every home closed in Maricopa County, that just a home closing generates $88,000 in cumulative dollars to our local economy. That is going to have an impact if we're down at this national rate at 34%. Sarah? So here's the next thing that's really important to look at, ladies and gentlemen. We're always looking for the tip of the iceberg. Nobody wants to catch falling glass. But this slide here says a lot. And it had the 20-year highest rate of interest rates for mortgage hit in the middle of this year, starting in October and November. And it has now been coming down ever since. So this report kicked out on December 13th, and it's just trying to illustrate that we have had some decline. We're still in the sixes. NAR is looking for that to hit in the high fives by the end of this quarter. Sarah? Ladies and gentlemen, when we look back historically for the last 10 years, Metro Phoenix has been a top 10 metro for all these kind of performance and increases and things like that. But there has been a shift, and things are headed to Georgia, North Carolina, South Carolina, Texas, Alabama. So these are some cities that are going to see strong markets this year and in 24. Sarah? Looking at here, this is the forecast I was referring to, is that they're anticipating, NAR is anticipating interest rates to get into the fives. Sarah? Okay, so now we're back into some basic numbers. And so we're looking at some trends here, see if we can look briefly what's happened last month, last quarter, and into the near future, ladies and gentlemen. So we just track this 4 months at a time. So the total number of actives in MLS basically, that says November. That should not be there. That should say December. But it's in the 19,000. Let's go to the next slide just in case. Okay, let's go back one. Okay, so what we're looking at here, ladies and gentlemen, the total single family at the very bottom, oops, go back, is 3148. That was the total number of transactions that we had in the month of November. December, we are kicked up. We're in the low 4,000 number. And so even though December traditionally is a slower month due to holiday and things like that, it did finish stronger than November. Please know that. Let's go to the next slide, Sarah. Okay, this is just trying to be playful. Oh gosh. Go to the next slide, Sarah. Here we go. Okay, back one. Now I'm on track. Sorry, ladies and gentlemen. If we look at what we were looking at December of last year, we had 20 at our lowest point of inventory. We had 4,000 active listings in 153 zip codes. That works out to 26 properties per zip. Last month, we had 14,863 listings, which works out to 97 listings per zip code. Ladies and gentlemen, that's a different strategy and tactic when we have an absorption rate of 30%. You're hovering right around 100 doors in a zip code. If we have an absorption rate of 30%, that means 3 out of 10 are selling every month. And that helps you with the buy side and the list side of the strategy, working with your buyer and seller. What's happened since then in the month of December as we move into January, Sarah, the next slide, please, is we've dipped down to 12,493. And ladies and gentlemen, that pulls right at 15, 16 homes fewer per zip code. We have absorption rate just over 30%, but it is trending to be more competitive, more seller-centric than buyer-centric. And that's the tipping point I want to share with your audience today. Next slide. Okay, so this is as of January 1. We had 12,965 active listings in Maricopa County only, or stress that. Here's our 4,381, that's the closed units. That's up about 350 doors more than we had we had 3,996 closed. That is up about 350 doors more than we had November of this time. But look at the trend line of the red and blue line bottom left, the average and median sale price. Notice that those have been trending down. And then when you look at the sale price on the bottom right slide, you just see the peak of our market hit in May and has been trending down ever since, just a few dollars a month. Sarah, I wasn't able to include it into this graph, but ladies and gentlemen that are listening in today keenly, if you saw today's graph, you would see both the blue and the red line hook and go upward. And you would see a January 1 increase that is much higher in average sale price than we did at the close of December of 2022. What does that mean? The first few homes that have been closing in January of this year that pushed have been at a much higher price point. And so the average and list sold ratio are also hooking upward just in the first 5 days of the market. And that's another illustration of the track meet gun firing, bang, we're off, and in 5 days it's going to show up. Sarah? Here is the most recent graph of month supply and absorption rate. So the red line reflects our absorption rate. Notice that it's gone up a little bit higher. It's in the 30%, not the 20%. And months of supply is currently at 3.13 versus approaching almost 4 in previous 2 months. Sarah? Okay, so ladies and gentlemen, this is a combined both Pinal and Maricopa County. I did this for the first time last month. I included it again this month. This is just trying to look at what's happening at our market. And Sarah, I'm going to invite you to chime in here in just a minute with your knowledge. But the actives, if you look at Pinal and Maricopa County combined, our active listings in blue circle up 204% at 15,601. Our solds are down 45%. Now, nationally, they're looking at 36%, but our solds are down 45% from where we were a year ago in Maricopa and Pinal County. Ladies and gentlemen, that impacts your output. That impacts your budgets. That impacts your manpower. That impacts a lot of things. And that is reality. The gun is fired. We're back to the races, but we're peaking at a low here. Now, our home prices are still up 2.1% from where they were a year ago, but our supply is up to 3.38 months national for the area, and our days on market are just under 60 days. If we go to the next slide, Sarah, and then I'm going to invite you to participate here just in a second. So here is on the left, this is going to be Maricopa County, and on the right, the other graph, the circle graph, is Pinal County. So you can see the two counties side by side. They are not the same. They just aren't, especially in the medium home sale price. They're more than $50 per square foot different in Pinal versus Maricopa County. And ladies and gentlemen, you just need to know that going in. When people aggregate everything in the MLS and go, well, your house should be worth X. Well, are you comparing Pinal County? Or are you comparing Maricopa County? And inside that, are you comparing Paradise Valley and Scottsdale against Goodyear? Ladies and gentlemen, we have to have a common sense approach to things. And I wanted to illustrate that. Sarah, what did you learn prior to coming on today?
Well, like you and I were talking about at the beginning, people are back to work. People are ready to list their homes. The realtors are calling them up. They're calling up their realtors. I think we're really starting to see people get ready for this spring market out there.
Amen. And that's really consistent. That's really consistent. Now, you may be in a cold weather climate, maybe in the Midwest, Chicago or another place. And maybe this is not your season, but traditionally this is our season. We normally sell the most homes during the months of late January through the end of May. That's our peak season. So in the spirit of Brian Buffini, when you're working, be working. When you're vacationing, vacation, meaning run, work. And when it's time to vacation, rest and have some vacation time. Sarah, let's keep going. Next slide, please. Okay, so this is on Maricopa County, and this is our market stats that make up just Maricopa County. Please know this, ladies and gentlemen, active listings in blue, 12,965. Well, our active listings are down 12% from where we were a month ago. We had fewer. Our inventory has actually gone down, and it's down 17% from where we were last quarter. And so, ladies and gentlemen, how did that happen? We had low sales? We did. And we also have less inventory. What that really means is we had a slightly above average number of homes that one of three things: they canceled, they went temporarily off market, or they expired. So our inventory is lower. Also, we're going to get to a graph here in a second looking at active homes going into listing. The big thing here that I'd like to share with you graph, just to give everybody peace of mind about the market we're in. In the green circle, 81% of our homes are a normal sale, and almost 10% in the month of December were new builds. And you go, well, God, why did new builds surge at the end of the month, end of the year? Well, if the new home builder has a December 31st year end, they wanted that home to close and get counted for 2022 and not slip into 2023. We still have 8% of our marketplace in Maricopa County that's a flip. And nationally, we peaked at about 20% of all homes flipped. We've been running in the 8%, 9% here in Maricopa County. Next slide, please, Sarah. Okay, so this is our active listings. And so what I'd like to have everybody take a look at. So number one, you're seeing the green lines and the vertical lines in the middle. That's the vertical count. And you're seeing visually that starting in November, December, we started to trend down in the number of active listings in our market. And then the red and the black line is the average dollar per square foot and the median dollar per square foot. And you're seeing that trend down, but also a little bit of a leveling happening. And that's showing up right now here in the first couple of days of January. If you go to the bottom gray of this and you look at the total number of listings and the current listing and median list price per square foot, again, this is Maricopa County, and you look back a full year ago, the average was 320.56. Today, it has gone from 320 to 330 down to 310 to 305. But up slightly to 306, just a little hook upward. And you're seeing that, and you're going to see that in the next 30 days. So look for that trend right then and there, ladies and gentlemen. Then in the median sale price list price, 270 went up to 296 to 277. We're at 269, just a slightly down in the median sale price. So that is a great linear year quarterly look. And then the orange line reflects that in the graph above. Sarah, next. Okay, so this is what's under contract, ladies and gentlemen. And again, you're seeing the average dollar per square foot in the black line, just a little bit of an uptick in the average. And then the listing count, we're coming down into the 4,000 range here. That's under contract. And that is really a long time low. Going back more than 2 full years. Next slide. Here is the sales volume, looking at sold inventory, dollars per square foot. Again, that line is trending down. The volume is slightly higher in December than it was in November. We've already talked about that. We'll be paying close attention to this at the end of January going into February 1. We're hoping to see that start to hook and go upward this time next month. Sarah? Here we go with cumulative days on market, and you're just seeing an increase there. They're working both average and median days. They're trending upward, just taking longer to get a home sold. So keep your sellers motivated, keep your buyers purposeful. Things are selling quick when they're priced at market and in great condition. And the homes that are less than perfect, they're staying on long past 60, 90 days. Please know that. Sarah? Okay, sale to list price. This is the last one I wanted to really lean into, ladies and gentlemen. Look at the green line, of course, average sold to list, and the average sold to the original price. Homes are down, according to this graph, from their high in around 9%. And that's, depending on who you talk to, we're seeing 9 to 12% from where the home was high a full year ago. But then as more and more homes are coming on the market in the last 90 days, they're being priced slightly less. So their average sold to list price in the green mark is where they're at currently, which is 2 to 4% negotiating space. Sarah? This is the next 3 slides are single pullouts, but they're part of a 1-page diagram. I wanted to really make sure this was very visible for the audience today. So when we look at seasonality in the speedometer dial, we're looking at 65, 68% seasonal adjusted supply index. But what I wanted to also illustrate is active listings in that green line. And you can see that we went over 15,000 and we dipped into the 12. This is all of Maricopa County and the Pinell County combined. Sarah? Here we're looking at demand, and we've just had very low demand. I know that's common sense to a lot of people, but when people have their home listed and they're like, why hasn't my home sold? Listing agent, you must not be very good. What else can you do for me? Ladies and gentlemen, there is a very low demand, and that's common sense out there. And so we don't set the market, we interpret the market. A graph like this helps us interpret the market. Sarah? This last one here, ladies and gentlemen, is really what I consider to be good news. So this is when you look at the black and the green line on the left graph, month of supply and absorption rate, you can see back in January of 2020, December of 2020, when those two inverted and we had extreme absorption rate, we had 270% absorption rate of homes. We were selling everything this month, next month, and part of the next month. Our market was a speed-based market, and it wasn't so much relationship. It was, do you know how to do an escalation clause? Can you move today? Can you pay over asking? Can you waive an inspection? Can you shorten an inspection? It was a speed-based market. And then you see that in June, when interest rates really kicked in, those inverted back into a market that we have seen for many years and months before, about month of supply and absorption rate being 25, 30%. And ladies and gentlemen, that's a relational based market. That is a deep connection, cooperation, collaboration market, not a speed-based market. And building relationships between agent, listing agent, buyer agent, along with your title person, your lending person, it is all forces working in concert to get a home closed. That is demonstrated in that graph right then and there. And it's coming back down. Month supply is coming back down, but we still have about 30% absorption rate. That one graph takeaway is very important for your audience today. Sarah? Okay, so how do we know the rest of the story? Active listings, Maricopa County. Well, we peaked at 16,134 in terms of new listings coming on in the marketplace, and that was October of this year. December, we only had 12,965 new listings come on play. 12,000, if we're selling 4, gosh, we should be stacking huge amount of inventory. Well, we're not, and I'll tell you why here in a second. Sarah? Next slide. So here, let's see, closed listings here. So we were just under 4,000 closed, slightly better than the month of November. But this is that year-end Thanksgiving, Christmas holiday. We normally see that at a lull. But ladies and gentlemen, if you go back 2 years to 2020, we closed 8,162. We closed double the amount of homes that we closed this year. And so just know that our local market, our manpower, our systems, we can double the pace and still keep up as an industry. Sarah? This slide here is about new listings coming in. Well, we normally would see a decrease in new listings November and December, but we had a record low at 4,667, that new listings coming in the market. And this graph is illustrating that. Back at the peak in June of 2022, we had 12,329. Ladies and gentlemen, that's a couple thousand more than our normal high. Ladies and gentlemen, that was a lot of our industry buyers knowing that they're not emotionally attached to this home. They're going to get it out, get it sold. If it doesn't sell this week, they're going to lower the price until it sells the next week and the next week and the next week. And I'm coming back to my little graph here, my little printout. Open door stock down 90.4% for the year. And in the last 5 days, it's up 22%, but that's because they've lost billions in market cap. That 12,329 is industry getting rid of their iBuyer, investment buyer inventory, and their stock took a punishment because of that. Sarah? Okay, cancel listings. Actually, we're down from 2,159 in its peak down to 1,616. Next slide. let's see, here we go. Temporarily off market. This happens in December. People like to stay in their home during the holiday, take a vacation, enjoy Hanukkah, enjoy Christmas. This is not uncommon, but please know that is higher than it has been in a couple years. 2188 temporary off market in the month of December. Sarah? Okay, so now, ladies and gentlemen, we're going in from the alphabet from A to T, Apache Junction. And so let's just go slowly through here so you know how to read this and understand it. In blue, active listings are up 159% from a year ago. In yellow, the median sale price is up only 1.3% from a year ago, but it's averaging $230 a square foot today. In green, sold listings are only down 10% in Apache Junction. Month of supply is up almost 200% to 2.5 months. Days of market 144. Any other time you would look at that and go, that's a pretty brisk market. And yet nationally, and that impact with interest rates and such, it doesn't have the push that it's had in the past. Now, these 5 dots are made up of, next slide, Sarah. Here are the numbers that represent the information we just talked about. So we talked earlier in the green and the dial in the center, the pie shape. Maricopa County is running about 92% normal sales, but in Apache Junction, where we normally would see 8% flip, they're closer to 18.9% to 92% flip. That's still a market of the moment. If you're in the business of wanting to flip a home, homes are flipping easier than Apache Junction than they are in say Scottsdale, for instance. And that's how you read this graph. Pay attention to the blue numbers of active under contract sold, and then right below that is a month, quarter, 6 month, and annual look back, and you can see where the trends are. Sarah, if we go to the next city, just as another example, here in Avondale, the active listings are up 400%, and their sold listings are down not 10% like Apache Junction, but the sold listings are down 43% in Avondale. On the brighter side, they're up 7.4 from a year ago, not 2. And ladies and gentlemen, this continues on for month after month. If somebody had a question and they wanted to put that in the chat, now's the time to do that. But Sarah, if you blaze through these, that is the balance of our report, and we should come out just about on time with everybody.
Yes, Scott, we did have a question about looking at the Phoenix and Scottsdale slides. Do we have enough time to
if you want to fast forward, we'll go to Phoenix first, and we'll catch Phoenix. Thank you.
As always, all of these slides are available after the presentation. Just reach out to your business development manager. I send them all to them. So we can focus just briefly on these, and then they are available.
Here we go. So Phoenix. Active listings are up 168%. Solds are not down 20, 30. They're down 49%. Almost 50% fewer homes closed in Phoenix the month of December of 2022 versus 2021. Home prices are up just 0.1%. And inventories 2.8 months. Not a lot of inventory. But days on market are at 55 days, right at just under 2 months. So that is Phoenix in a nutshell. Big thing here, median sale price $259 a square foot, down from they were at $259.99 a year ago. Sarah, we'll jump ahead a couple more slides into Scottsdale and landing here. So active listings are up 216%. Sold listings down. Not 20, not 40, 55%. 55%. Month supply is up 613% or 4.3 months. Now, what's happening in Scottsdale here just in a few weeks? We've got the Waste Management Golf Tournament, which is always big. You got Barrett-Jackson. Oh, ladies and gentlemen, we have the Super Bowl coming. Now, ladies and gentlemen, were people buying properties 6, 12, even 18 months ago, knowing that the Super Bowl is coming? You know what? They really were. They're not buying them this week for the Super Bowl next month. They were in acquisition mode months, if not a year or so ago, knowing that it was coming. So sold listings down 55%. That I'm not surprised by that, because everybody knew the Super Bowl was coming. I wonder how big a surge in price we're going to have for VRBO and Airbnb the week of the Super Bowl. I wish I knew where to go to get that statistic. That to me would be very interesting. And I hope that helped whoever had the question on that.
Perfect. I think it did. Yeah, we have Waste Management and the Super Bowl on the same weekend.
Yes.
That's going to be a wild time here in our metro for sure.
Well, Sarah, I hope this was helpful. I know we're going to look at, ladies and gentlemen who are paying attention, we're going to look at top grading this report and how we do things in the coming months. But we hope that today that this was impactful and made a difference as the gun fires and you kick off your 2023. Good selling state. Know that we are in a relational based market, and going deep and connecting deep with your buyer and your seller is paramount. Being collaborative, communicative with all parties has never been more important. Sarah, as always, I thank you and I thank your team for always doing a great job.
Thank you, Scott. This was great information. I will say it one more time just to beat a dead horse. This recording and all these slides are available. We also do market snapshots off of the graphs. So if you want any personal branded material that you can share with your clients, like I said, exactly what we talked about today, these are the questions that your clients are asking or that they want to know. And you need to make sure that you are opening up that door of information for them so that they are coming to you, that they are working with you, and that you are capturing those leads and, keep working through 2023. It's been an interesting couple of years, but for those that work their systems, for those that stay top of mind, 2023 is going to be a great year. And as always, Scott, we're so grateful to have you on and have all of this information. Here's to an amazing 2023, guys. And let us know if we can help you with any of your marketing material. And as always, we'd love to be written in on your next contract. We have 7 offices across the valley, as well as 1 in Prescott, to service all of your escrow and title needs. Y'all have a great January.
Thanks, everybody. Have a great day and a great 2023.